Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell of TheStreet, and together we bring you the Morning Call Express. We got a lot of headlines over the weekend. Italian Prime Minister Mario Monti, he's announced his resignation. This morning, China numbers came out. They were disappointed a little bit. Scott, going into trading today, how are you going to handle these headlines? Well,
it seems like the market's handling it in stride. I think we're down 2 to 4 handles over the weekend. Some people were thinking we'd be down 8 to 15 handles, and at this point, the volatility is just not that high. It does seem as if there's support in the market. Every time we've had a bit of a correction, support came in where you would expect it. So at this point, I feel as though this lethargic trade can continue into year end, but it's very targeted, it's very selective, and I don't think it's a situation where you need to put much size in.
Yeah, the stocks were able to hold higher last week, but they did lack momentum. So why don't we take a look at the chart of the S&P 500 to see exactly what happened.
Okay, so if we go to that chart, which is right here, you will see that we've had a really nice move since that November 16th low. We went and peaked all the way up here right around, what was this, about 423. And since then, we have a nice consolidation pattern. Let the moving averages catch up, let these prices be absorbed. And then on Friday, we did close above the 50-day, which is somewhat constructive. So today, we're off a little bit. I think a lot of traders could trade against 410-ish. As long as we hold 410, I do think there's a high probability we take out this 423 and ultimately, get up to the 1440 area, before year's end.
We saw different movement in different groups. The financials, for one, they had a nice week last week. Bank of America was up very nicely. I think JP Morgan was playing catch up.
Yeah, and if you look right here at the XLF, you'll see you had some power last week. It was a good targeted trade. You go to the chart here. There you go. Boom, above the moving averages, showing relative strength. In that group, like you mentioned, Bank of America, really nice breakout on all time frames. We were talking about accumulating it above 950, and then here was your breakout above 10. Then you had JP Morgan, play a little catch up. Nice situation on Friday, closing at the highs, right near this consolidation. So I think there's a lot to do, but it's not spread out. It's got to be targeted and it has to be strategic.
Let's take a look at the transports too, because you're seeing a really nice channel there that you like, which could be positive for the Dow.
Right, and people love the transports to lead the Dow. That's, I think, some part of the Dow theory, not trader theory. I like when technology leads the markets, but anyway, you go to the chart here and you'll see, we do have a descending channel, and you know how I love descending channels because that means you have a really nice consolidation. That means institutions are getting involved in here, and accumulating this. So at this particular point, the longer it stays above the 90-ish in the high end, I think this could be someplace to be into the year end and into 2013, and that would be healthy for the markets overall.
Speaking of a trader's vehicle, tech has been a mixed bag. Let's take a look at Apple, though, because it was a really roller coaster week for this name.
Yes, when Apple has an irregular heartbeat, technology tends to have a heart attack. And if you look here real quickly at the chart, you'll see long term, a lot of guys are starting to say, we do have this, macro head and shoulders pattern, the left shoulder, the head, the right shoulder, and very big support coming in here, now around 505 to 518. But if this gives way, there's really not that much, quick spot you have is 480 and then all the way down here to 440. So I think there's a lot of concern here. So you take a micro look. I was not very happy with what took place on Friday. Okay, we failed here at resistance after a nice targeted trade from this 522 area, but in 3 days we engulfed this entire range. You had a nice reversal Thursday. Friday just gave it up. So I'd just be very careful. The low to trade against here is 530. Jeffrey's downgraded the price. It's down a little bit. So, watch out. First level 518, 505. It starts to break below this area, then that macro break comes into play.
That's something to keep our eyes on. Well, we're going to get into all this and more in the long form version, so make sure you should check that out.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.